Hey all, today I'm going to teach you how to invest. I'm also going to decode some of the more complex terms around investing in stocks. I'm also going to show you how to set up your very first trading account and how to buy your first stock. And I'm also going to tell you a bit about the general idea around longer term investing. This video will help you understand investing and stock trading and also help you start investing and stock trading. And it will put you on a path to retire wealthy and to retire early. If this video helps you at all, then be sure to drop a like down below and subscribe to the channel if you haven't already. Now let's get started. But before we do start, I just want to say one thing, and that's that the buying and selling of stocks shouldn't be treated as reliable income because you can definitely lose money, especially if you're using some of the more riskier strategies. But it can be a great way to invest your savings and generate a much higher return than you could by leaving it in the bank. Providing that you spread your risk and invest for the longer term and don't make short-term speculative decisions, it can be a great way to beat any average return by bank current accounts or bank savings accounts or anything quite simple like that. So, investing 101. What does it all mean? And let's start from the top with what actually is investing. And investing is the term given to the activity of placing money into a financial scheme or a stock or a property or something like that with the expectation of generating a profit or generating more money. Stocks can be great for this because you could invest in some newer companies like Snapchat or Netflix or Lyft with the aim that one day they might become bigger, more valuable and more profitable than maybe their comparators such as Disney or Facebook, for example. Or you could invest in some currently underperforming companies like travel companies and construction companies with the hope that they then might start improving and performing a bit better and become more valuable as a result. But so what actually is a stock and how does it become worth more or less? Well, when someone starts a company, they put in a bit of starting cash in return for 100% ownership of that company or 100% of the stock. And then the owner might build their business over a number of years. And then they might want to sell some of that ownership of the company to realise some of their profits. They might not want to sell the whole company to someone else and completely retire. They might only want to sell half of the company, so they could then sell half of their stock to someone else. Therefore, if someone owns half of the stock, they're entitled to half of the company and half of any money that the company makes, if it's obviously paid out to the owners by dividend. And therefore, as the company starts to improve and makes more money, the company's then worth more, and therefore the stock is worth more. And when a company is listed on the stock market or the stock exchange via an IPO or initial public offering, a huge portion of the ownership or that stock is sold off to the public, and therefore you can go out there and buy some ownership in a company or buy some of their stock. And you can buy some of that stock from the company during the IPO or initial public offering, or you could just buy it from someone else, obviously if they've already listed some time ago. And that means you'll be buying a small part of that company. So you could go out there and buy a small part of Netflix or a little bit of Tesla or some eBay. But obviously if you want to buy more than 1 or 2 or 3 stocks, say if you wanted to buy 100 stocks or a little bit of 200 different stocks, you could go out there and buy a little bit of each individual one, but that could take a lot of time and could be really hard to keep track of. So instead, you could go out and buy a little bit of an ETF or an exchange traded fund. And you could kind of imagine this as like another separate company that buys a little bit of a whole bunch of different companies. So you're effectively just buying a little bit of this company instead of a little bit of all of these. And this is a really great way to diversify your risk because instead of just buying one stock, you're obviously maybe buying 100 or 200 at the same time. So what are some complex terms or commonly used terms to do with investing in stocks? And the first one is the S&P 500. Now this is a collection of the 500 largest US stocks. And obviously you can invest in the S&P 500 just like investing in any other ETF. And obviously this is a great way to diversify your investment. And the next one is the FTSE 100 or the FTSE 100. And this is kind of similar to the S&P 500, but instead of having the 500 biggest US stocks, it has the 100 biggest UK stocks. And the next one is shorting, which is where you sell a stock that you don't technically own. Now this one is a little bit weird and kind of sounds a bit confusing. So let's talk about it in more detail. And this is effectively where you go out and borrow a stock from someone and sell it and then buy it back for them at a lower price. And then you can kind of make some money. So let's say you borrowed a stock from someone for £100, sold it for the £100, and then bought it back for them for £80. You obviously give them the stock back, but you've kept £20 profit. And now let's give you an actual example. Let's say Tesla out there at the moment is about $1,000 per share, which I think is fairly accurate at the time of making this video. Now, what if I didn't think Tesla was really worth $1,000 per share? I could borrow a share of Tesla from someone and sell it for that $1,000 and then buy it back later, maybe if it comes down to $500 per share. We then give them their share back and keep the $500 profit. Now, if you want to short a stock, you don't actually have to go out there and ring people up and see if they've got some shares that you can sell for them and buy them back later. You can short stocks on most trading platforms, and the trading platform kind of does it automatically for you and sorts it all out. You might also hear the term going long, which is effectively the opposite of shorting and basically just the word for normal investing. And that's where you buy a stock with the intention of selling it later for more money than you bought it for. The next term is averaging down, and this is a really great term and really important when you're doing long-term investing. And this is where a stock is falling downwards, but you keep on buying it all the way down. So instead of waiting for a stock to start here, fall and trying to time it at the very, very bottom, buy some and then wait for it to come back up, you just buy some of the stock all the way down. And this has the advantage of not having to time the market perfectly for that one very little bottom. You can just buy a little bit all the way down, and therefore if you miss the very bottom, it doesn't really matter because you've still got quite a lot of the stock and a fairly low average price. As a bit of an example, let's say you buy some stock at £80, some stock at £60, some stock at £40, and some stock at £20. Now obviously you've bought a little bit all the way down and you didn't have to wait for the perfect bottom at £20 to buy some stock. You've bought some all the way down and your average is probably somewhere around £50. Next up is blue chip stocks, and this is the name given to the biggest of the big stocks, typically with a market cap of over $10 billion. And these are my favourite stocks to buy, in fact, because you kind of know that these companies are going to do well. These companies have done well for 10 years or 50 years, 100 years, maybe even longer. They're companies like Amazon, Apple, Facebook, Walmart, McDonald's, loads more. These companies have been through 1 recession, 2 recessions, 3, maybe even more recessions, so they kind of know really what they're doing. We've also got the bid price and the ask price. So when you buy a stock, it's not exactly like going to Tesco's and buying some milk, where the price is £1.30. Not 70p, but £1.30. And you can't really offer the cashier 70p for that £1.30 jug of milk. They're probably just going to say no. But when you buy a stock, you can kind of barter the price a little bit more. And when you use a detailed stock trading platform, you'll be able to see all of the bid and the ask prices. You'll be able to see some sellers setting the ask price. Maybe they want £34.05 for their stock, or £34.06 or 7p for their stock. And you'll also see some buyers setting the bid price. Maybe they only want to offer £34 on the dot, or £34 and a penny, or £34.02. But obviously every now and then there'll be a buyer that comes in with the bid price of £34.05 that meets the seller's price and therefore buys all of that stock that's being sold at that price. And the next term is a dividend. And a dividend is a way for a company to pay out some of the profits to investors, because obviously investors are entitled to some of those profits. Now obviously when a company pays out a dividend, if you're holding a share of that company in a trading account, you'll get some of that money that you're entitled to, and you could theoretically invest that money back into the company and buy some more shares. And next up is leverage, and this is kind of like taking out a loan to buy some more shares. This is available through some trading platforms, not all of them, so you'll have to research what trading platforms offer you to use leverage. Now effectively, let's say you wanted to go and buy some Tesla, and Tesla was really low at the moment, let's say like $300 per share, and you were really confident that it was going to go back up. You could just use $300 to buy 1 share, or you could use a 10x leverage and take out enough money as a loan kind of to buy 10 shares. And then obviously when the shares go up, you then sell them, pay off the amount that you borrowed, and you're left with a much bigger profit. Now this obviously has its advantages and its disadvantages, but I'll save those for a different video. So how can you invest in or trade stocks? And there's a whole load of different ways that you can actually do it, and a whole load of different devices that you can use as well. You could trade stocks from a laptop or a desktop or from your phone, or maybe even a smart TV, although I'm not sure I'd recommend that one. Now obviously if you want to invest for the longer term, like I do, you'd probably be okay trading stocks from your phone because it's quite slow, but obviously you can still go out there and buy the stock that you want. Now obviously if you're into some like higher speed trading, like day trading, where you buy and sell in a matter of seconds or a matter of minutes, you might not want to use your phone because obviously it's a little bit clunky and quite hard to get the right price. Now there's a whole load of different stock trading apps and stock trading platforms in both the UK and the US and all other countries as well. So I definitely advise doing a bit of research and finding which platform is best for you. A lot of the platforms have similar kind of fee structures and similar kind of mechanics, so it kind of just depends which one you find easiest to use and most like visually appealing. Most of these platforms also have different kinds of accounts as well, like basic accounts or a tax-free ISA. So it's also probably worth doing some research as to which one of those accounts is best for you. You'll probably have to pay some money for the tax-free ISA, but it means that you can save up to £20,000 a year into that account, and then any profits that are generated on your investments, you don't have to pay capital gains tax on those profits when you realise them. So I'm obviously from the UK, and my personal favourite stock trading app is Freetrade. Freetrade for me was really easy to set up and was really visually appealing and easy to use as well. And if you message me on Instagram, which I'll put like down here on the screen and also down in the description below, then I can send you a link to sign up for Freetrade. And if you do sign up, then you get one free share worth up to £200, kind of like a little lucky dip. You obviously just sign up and they give you a free share. So let's jump into my phone and I'll give you a tutorial on how to set up a free account on Freetrade. Rightio, so we're into the phone. So what we're going to do to set up our Freetrade account is we're going to open it up and then type in our email address, and I've just made a what would you class this as, like a throwaway email address just to show you the process of creating an account. So obviously that's not my actual email address, but we're going to hit continue, and then you have to activate your account by going into your email and clicking on the link. So let's do that now. There we go. So now that we've activated our email, we need to set up a passcode. So again, I'm just going to use a passcode that I probably wouldn't really use, just a really straightforward one, and we're not going to use the Face ID to log in. So we're then going to need to put in our first name and surname, and I evidently can't spell, which is never great, and the birth date. And again, this isn't my actual birth date, it's fairly close to it, but not the exact birth date. And obviously the postcode, so the only postcode that I can think of is actually my home one, so I'll just blank the screen out for this one. You'll then need to select your nationality and enter your national insurance number. Again, the only national insurance number I can think of is my own one, and confirm that you're not a US citizen or a US tax resident. And then you can pick whether you want to use the investment ISA or the basic account. Again, we kind of went through earlier the advantages of the investment ISA, but for this example, we'll just use the basic account. And then obviously, unfortunately, I can't create this account because I've already used the national insurance number on a separate account, but that's most of the setup process. I think you then have to submit some supporting documentation like a passport or a driver's license or something to prove that it is actually you, but that's largely the account setup process. And so now that we've logged into our Freetrade account, I'm also going to show you how to buy a share. So I've navigated to a really random share. This might not be one that I'd usually buy, but we're just going to buy it for an example. So you navigate to the share that you want to buy, and the platform is really easy to use. As you can see down the bottom, you've got a bunch of different tabs to see your account, your current portfolio, to discover new stocks, different market activity and bits and pieces like that. But so to buy your first stock, you're going to navigate to the one that you want. You're going to click on buy. You're going to click on how much of the stock you want to buy. So I'm just going to use whatever's left in my account. I tend not to leave anything in the actual account in the holding balance. I obviously have all of the money invested into stocks, or obviously in my current personal account, like my direct debit account. I don't really see the point in just leaving cash in the trading platform, but obviously I put some in there just to show you what it would look like to purchase this stock. So obviously with £3.90 I can buy one share or 1.09 shares, as you can buy fractions of shares as well. So you're then going to go to review the order. It will then show you obviously the translation from USD into GBP, and then you can purchase the stock by clicking confirm buy. There we go, we've purchased our first stock.